This is Ehang on the monthly chart, and in recent months, price did reach a short-term high at the $26 level, where it ran into some resistance, and since then has retraced 50%. Question is, where will price stop, pause, and or move higher? To get some clues, we need to scroll down to the lower time frames. This is the weekly chart, and you can see at the roughly $10 level you have resistance, support. So this $10 level should serve as support once again. But really, when you scroll down to the daily chart, what's interesting is you had a gap earlier this week. So in order to figure out why the price gap down and sitting below the 200-day moving average, let's look at this article. So you have this famous, renowned Wall Street short seller by the name of Hindenburg Research, and what they do is they put out crap about companies, true or false, and then they benefit from that news. In this case, they shorted Ehang, and then put out a news press on the company. So let's get into the article. In the red hot flying car or eVTOL aircraft market, growth investors have found a number of stocks with significant upside momentum, many of whom have received improved outlooks as a result of key advancements in the sector. One such stock that's been on many investors' radar of late is that of Ehang. Shares were more than up 250% from the 52-week low roughly a year ago. So again, you got this Hindenburg Research. They published a short report on the company, and here's what they're claiming. Ehang's order book doesn't reflect reality. Its biggest order is likely abandoned. The company has been underinvesting in research and development. Capital raise done by the company was led by an individual with a potential scrupulous background. Initial restrictions on test flights are more cumbersome than its peers and could require a significant amount of capital if a redesign is needed. Ehang's valuation is simply too steep relative to its peers. Now, the company came back to rebuttal what Hindenburg was saying, and this is what they had to say. The accumulated orders and pre-orders the company has received in the past reflected the strong interest and genuine demand from customers for Ehang's innovative eVTOL landing products, which are based on signed contracts and planned for delivery after obtaining regulatory approvals, as per customers' request. The company will continue to provide updates on its order pipeline from time to time, including significant new orders it received after obtaining the certificate for unmanned eVTOL from the Civil Aviation Administration of China. Now, what you do with the information, it's up to you. However, I like to look at the charts to see what the chart is saying. I like to look at the fundamentals as well, but the charts drive my decisions. Overall, it appears Ehang is not backing down from how the company reports its order bookings. It suggests that these orders are real. Accordingly, given the company's Chinese jurisdiction, it remains to be seen what kind of investigation will be done around the company's reporting practices. So, again, what the chart saying? The momentum is to the downside. You have now the moving averages starting to point down, which is going to serve as dynamic resistance. You have price below the major 200-day moving average, which should serve as a line in the sand. You have your RSIs on the daily chart in oversold territory. So, potentially the bounce is warranted. However, you are making lower highs and lower lows. So the chart suggests more downside risk. However, look for support to come in at this $10 level. Thanks for watching. Subscribe. Please like the video.